So let's talk about the wealth tax. You said you think it's unconstitutional. We've done a lot of unconstitutional things in our nation before. We continue to do them. So, in popularity, sometimes those things pass. I mean, that's the problem of a democracy is 51% of the population can vote to take away the assets of the other 49%. And we have a constitution to protect that. But what if it passes? What would that do for the markets?
I think it would be immediately challenged. Well, first of all, if it passes, the market's going to get massacred. It's somewhat of an unfair taking of something that's already been taxed. And if what you're telling America's entrepreneurs and America's youth is if you make too much, we're going to take it back, it's a disincentive for anyone to really move forward.
If Jeff Bezos, it's December 21st, and he looks at his tax bill that's coming up and he says, maybe we should point out some of the problems that we're having in our sales this Christmas. And so he pre-reports, drives the stock down on the date that you take the photograph and say, wow, this is how much Amazon was worth. He could knock his tax bill down by billions of dollars.
Right. Well, there's even something I think that would be worse than that. A billionaire knocking down his tax bill a few billion is one thing. But I think what's core and really important to the United States is, as you know, the majority of tax receipts come from small businesses, not from personal income tax returns. So when you look at our small business taxes, if you and I, let's say, Kevin, let's say you and I own a business together, and let's say we're a food company, and it's private.
And it's worth maybe $50 million.
Let's just say we have $100 million of sales, and we make $20 million pre-tax a year. And you and I own the business 50-50, and if the wealth tax goes into effect, let's just say you and I only have $20 million bucks apiece. Well, we don't break that threshold of 50 million. However, the IRS is going to go value our food business that's private.
Right.
And they're going to say, well, you guys have a food business that's a $100 million a year business, you make 20. These things sell in the market today for 10 times revenue because you're growing fast, you have $1 billion business. So by the way, Kevin and Kyle, you guys own to turn the lights on this year, you owe us 20 million bucks. Cash.
I don't want in that business.
So no, you know what we'll do? We'll close it.
Yeah.
Or we'll sell it right away.
Yeah, absolutely.
Right?
No
and
question.
so I think there are many people that have private businesses that are entrepreneurs that would have their businesses valued at, call it 5 to 10 times cash flow, or if it's growing, 8 to 10 times sales, and you're going to owe 2% on that.
And that's so
and you don't have that money. Well, you wouldn't have the cash, and nor would I.
Yeah, but it's so subjective. The markets move up and down, right?
Yeah.
There's nothing objective about valuing private businesses. You can do it, but it's what the economy's like at the time and so forth. And so you could tax them when things seem good, but maybe a year from now, it's not worth that.
Yeah. So I have friends that are great entrepreneurs that currently run businesses that have all told me they'll just close their business. They're not going to pay a tax on a business valuation where they would do better just turning it off and managing their family's capital.
Right.
So I think that's going to happen, and it's going to starve our country. It's going to starve our country of revenue.
Yeah.
And entrepreneurship.